Hey, this is Chris. So I wanted to just update you on what is going on with the Feds announcing that the interest rates are dropped by a half a point. So what happens is that that's not in the real world as far as you and I with a home mortgage. It is, but it's not. There's more to it than that. So with the Feds reducing the rate by a half, that is on the prime rate. So the prime rate was 8.5. Now it's 8. What that affects immediately is, like, for instance, the line of credit interest rates. So if you have a line of credit, which we do line of credits, by the way, a home equity line of credit is what a lot of people know it as well. So it means the same thing. So that rate dropped by a half a point right off. That is different than the mortgage interest rates. So there's, just like I've said several times throughout the years, there's several things that affect the interest rates. So just because, like, how many years ago, whenever the Fed said, oh, the interest rates are dropped to zero, it doesn't mean that the interest rates are now zero, because there's a lot that goes into play with it. So with what I do and being a mortgage broker, my banks have already put into place, anticipated these changes. So we've already been seeing the decrease in rates for the last few weeks or so. For instance, 2 or 3 weeks ago, even at the end of, I know the end of August, even July, but even in the last 2 or 3 weeks, rates have reduced by at least a half just in the last few weeks on a mortgage, in that world, in the world that we're speaking of. And so again, there's a lot of things that affect the interest rates. So the housing, the federal blue book, for example. So I have analysts that I subscribe to for like probably 20 years now, save my clients probably well over $100,000. I know one client in particular, between Tuesday and Thursday, I saved them over 10 grand. So I'm estimating probably saving my clients over hundreds of thousands throughout the years. So for instance, let me pull it up real quick. So this week, so today is Thursday, but this is just a for instance of this week. I get a newsletter, which if you'd like to have a copy of that each week, let me know, comment, reply, whatever you're watching this on, send me an email, whatever. And I get updates throughout the day, all the time. I know whenever rates are going up, whenever they're going down, so on and so forth. So this week just alone, there was retail sales, industrial production, capacity utilization, NAHB housing index, housing starts, Fed meeting adjourns, Philadelphia Fed survey, leading economic indicators, and existing home sales. So that's just this week. That doesn't include if we're at war, the election, if the government shuts down on September 30th, like I heard on the TV the other day, because they're working on budgets. It doesn't, when the Feds announce this, there is a lot more to go into it. Also, what affects your rates are your credit scores, your loan amount, your loan type. So all of these things happen as well. So the interest rates that I was talking about that went down so much was FHA. Conventional is a little bit higher of a rate. But for instance, if you are refinancing to get cash out and your loan amount is less than 150 to 175,000 and your scores are lower, you're going to have a higher interest rate than somebody else with higher and all of that. So bottom line is, we take care of that for you, but just because the interest rates show that it's reduced to 0.5%, in my world, that's already come into play. And it is not that the interest rate went from 6 to 6.5 or from 6 to 5.5. That's not how it works. So I just wanted to give you some education on how this works. This is something that I do. Again, I love numbers. This is something that I understand. Except for all of those little things, as far as the NAHB housing index, whatever. I don't know what some of those are, but here to educate you as usual, here to tell you what's real. what is in reality, what is affecting you, because everything that you hear, there's a little bit of a turn, it's not exactly that. Yes, it is, but in your terms, it's not exactly that. So I just want to make sure that you understand. They are anticipating, or from what I read yesterday or whatever, they're talking about possibly reducing them again at the, by the end of this year and also next year. So for some of you, it is absolutely great to refinance. And so if you think that, we need to take a look at it, then let me know. I have you in my system as well. Just send me an email, text, whatever. Again, all my information is here and we can take a look at it. I just need your mortgage statement. You need to do a quick application, get me the documents, and I can get you going on a refinance. But again, as always, I'm going to make sure that it makes sense for the money. So there's hard costs in refinancing. The closing costs are usually added in. The upfront is normally your credit and appraisal. If you require an appraisal, sometimes we don't have to have one, so it just depends. But those are normally your only two closing costs with us anyways. So again, refinancing, cash out, or rate and term, line of credits, we do all of that, we do. But my point today is to make sure that you understand what is going on with the feds reducing the rates and how it actually works. So I will talk to you soon. Contact me if you need anything, or if you have any questions, or if I can elaborate any more. And again, if you want to have that newsletter, if it's going to make sense to you, again, some things do, some things don't to me. So hope you have a great day. Just wanted to give you this update and make you aware and tell you what is real, because that's what we do. Okay, have a great day.